Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. I founded it 21 years ago back in 2003 to provide the most advanced technical analysis on the planet, advanced market analysis, actionable trade ideas, and of course my personal passion, developing mechanical trade systems, algorithms, such as our 21 SPY and ES mean reversion systems with approximately 90% winning trades, and of course our amazing KISS systems, which have been knocking it out of the park for the last 2 years, and especially most recently our high performance systems. I also have more systems coming, so you name it, tons of awesome stuff here. Anyway, go ahead and get back to this newsletter video at hand. It is Thursday, October 24th. And also, I apologize for the last video I put on YouTube. It looks like it was cut off short. I actually didn't realize it until the next day. So I apologize for not checking on that. Won't happen again. Anyway, I'm going to go and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Thursday, October 24th newsletter. As you know, Steve and I switched up newsletters this week because of the surgery I had on Monday for the hernia. And I appreciate all the well wishes and thoughts and prayers from all of you guys. And by the way, yesterday was a fairly rough day. In fact, I had to lay down most of the day, but doing a lot better now. I think I'm finally starting to get through it again. It's going to be a while before I get back to the gym, stuff like that. But again, appreciate all the thoughts and comments that you guys have sent me. Anyway, again, it's Thursday, October 24th. This is the newsletter, technical analysis of the market and trading systems. As far as this newsletter, divided into 6 major sections. First off, I'll make my opening statement about the market here. Then we're going to talk about some admin comments. So one of the mean reversion systems went long today. The trend Momo, it triggered on ES futures, a first entry long. I'll go over that after we discuss the opening comments here. Then I'm going to talk about the KISS systems. Then we'll go and move over back to the general market analysis. Remember, we like to do a top-down approach on the S&P 500, the NASDAQ, small caps. We'll review a few indicators such as the VIX. We'll also look at the bond market. Finally saw a pullback there in the 10-year Treasury yield today. And we saw a pullback in the US dollar, which has been super strong. So those two finally pulled back today. We'll also review a few market sectors. We'll look at the US dollar, of course. We'll look at Bitcoin and related stocks. That area looks good to me. Precious metals, GDX. And finally, we'll follow up with trade ideas. All right. As you know, guys, we're in earnings season. Okay. Tesla reported yesterday after hours, and that stock was up huge today. By the way, the KISS high performance went long right in the morning. So far, it's got a nice little trade there. Amazon reported here tonight. Google and Meta report next week on the 28th. AMD on the 29th. Microsoft on October 30th. And Apple on October 31st. Again, we're in earnings season. These are the big names. We'll see how the market reacts to those. Generally, the market holds up well during earnings season. So we'll see if that is yet to be the case. Now, as far as the market, as you know, uptrend on all time frames. Long term, intermediate term. Short term, we're uptrending, but we're in a consolidation phase. The S&P 500 is pulled back a little bit off the highs, but it's still holding its 20-day moving average. So technically, we're still in an uptrend as long as we're above that 20-day. And we'll see what follows tomorrow. And let's go ahead and look at some of these admin comments. So first off, let's talk about the mechanical system. So today, the mean reversion system, the trend Momo, triggered a first entry long on MES futures. We trade MES futures instead of ES futures. And this trade was sent out to all subscribers of the website. Here's the statistics for this system. Profit factor of 15.2, approximately 88% winning trades. This tends to be a short-term system. Again, it's a pure mean reversion. Average hold time, 5 days, 9 hours. So, typically not in a trade for very long. And the trade history here goes back to basically 1999. Next, image number 3. So here's the official trade list table for the mean reversion systems that have triggered on ES futures. So you can see the trade at the top there, trade number 6. So there's been 26 trades this year on the mean reversion systems. The previous QE Momo was essentially a flat trade, so this one triggered once again. You can see the trades this year. Overall, systems have done very well. There's a few losers here, but the vast majority are winners. Again, if you had a subscription at Breakpoint Trades and all you did is this, you ignored all the newsletters, you didn't do any of the trade ideas, you didn't do any other systems. Again, this here on these modest sizes, it's up $22,700. So again, guys, considering that the subscription is $300 for 6 months, you can easily justify and pay that membership over many times over. Okay. This year, the mean reversion systems have been fairly quiet because, we've had a, bull market move this year. Mean reversion systems are more active typically during market consolidations and, of course, bear markets like 2022. During 2022, the mean reversion systems had about 100, I think it was 95 trades. So it shows you how much more active they were in the bear market conditions. Again, the Trend Momo triggered on ES futures. It did not trigger for the SPY ETF. The SPY ETF has approximately the same number of trades as well. But again, this only triggered on the MES futures. Okay, so this trade is open and we'll see how this does. Next, let's talk about the KISS system. So here's the high performance table. Again, these have done outstanding. Quite a few of you are subscribed to this service. There's still quite a few of you who are not. And, I may give some of you who are not subscribed a complimentary month because I really think you guys need to experience how well these are working. But anyway, you can see some of these open trades here. By the way, if you look, Tesla, that went long right in the morning on the open. So that trade's currently up 4%. Otherwise, really nice trades here. URA, 78 minutes, up almost 37%. UPRO, this current trade's up 17%. We actually have 2 UPRO systems. MSTR, that's a crypto type stock. That's up about 14%, etc. And the last thing, image number 5. So here is an example of what some of these statistics look like for the high performance. So this is the UPRO. Remember, that's the triple leveraged ETF for SPY. And this is the 30-minute system. And you can see the stats versus buy and hold, traditional buy and hold. 30-minute, there's 13 bars in a day. But you can see, even though it's a 30-minute system, looks like it averages roughly, 12 to 15 trades a year. It can be more sometimes, but that's not a huge amount. Maybe 1 trade a month, a little bit more, 1.5 trades a month. This year, there's 9 trades. And system's up 56.9% this year. It is slightly less than the buy and hold, which is up 60%. But the drawdown, look at your drawdown, 7.5% versus 27% for buy and hold. So the drawdown is really what stands out on the KISS systems. But again, a lot of years are much higher. Here's 2022, that bear market. The high performance system made 25%. But buy and hold lost 57%. Imagine going through a 57% drawdown. If that was a large amount of your account, most people, I know myself, I couldn't sit through that. I'd be freaking out. And actually the max drawdown was 67%. Imagine letting your account go through 67% drawdown. You can't do it. So that's why these leveraged ETFs aren't good to buy and hold for the long term. But the KISS system did well. Look, it was only had a 9% drawdown in 2022 versus a 67% drawdown. 2020, KISS system made 135% versus buy and hold making only 9.8%. Again, not every year is higher. Just like this year, it's a few points higher, but that could change by the end of the year. But overall, good job here. And you can see overall, this system has about 50% winning trades. Again, the reason why it makes money is because it catches big trending moves and the losses are small. You can win 50 to 60% of the time and make very good money if you're catching your trends and just keeping your losses small. Okay. Average hold time on this one is a little bit shorter than some of the other systems. Average overall is about 14 days, winning trades 24 days, losing trades only in their 3 days. So it gets out of those losers fairly quickly, as you can see. All right, so that does it for the KISS High Performance Systems. I am going to be setting a live webinar, guys. It's well overdue. I need to bring everyone in, give you some thoughts, go over more details in these, answer your questions in real time, and just go over some things, how I look at them, and I think that'll help you guys trade these systems better. But let's go and get back to the general market newsletter at hand. So image number 6 shows the index sector table, what transpired today and this week. So you can see major indexes mostly up except for the Dow. For the week, of course, everything is still down, anywhere from 0.5% to 2%. The Russell and the Dow were leading to the downside. The S&P is down 0.9%, while the NASDAQ area holding up a little better, only down about 0.4%. As far as the 21 market sectors, kind of a 50-50 mix of up and down, but mostly benign moves today. Most of these moves are less than 1% up or down. Biggest strength today was consumer discretionary, up 3.2%, and home builders. Weakest sector today was drugs, down 1%. And you can see, though, for the week, most of the sectors, well, out of the 21 sectors, only one sector is slightly up, and that is consumer discretionary. Currencies, US dollar, finally a pullback. Finally. Remember, that area's been so damn strong. Down 0.38%. Still up 0.5% for the week, though. Bitcoin up nicely, up 2.3% today. Still down for the week a little bit. Commodities, kind of a mixed bag here. The index itself was mostly flat. Crude oil down 0.7%. Natural gas, though, had a big move, up 3.6%, 9.9% for the week. Copper, uranium up slightly. Agriculture down. Precious metals, gold was up, silver was slightly down, and the miners were down. Now, the thing about the miners here, guys, Newmont had earnings, and it was down 15% today. Newmont is the largest component of GDX. The thing about these mining stocks, my general thing is they usually don't react well to earnings. So if you're holding some of these individual mining stocks, you better check them for earnings because you can get negative surprises. And as far as the bond market, like I said, finally saw a little pullback in the 10-year, 30-year Treasury yield, but still up strongly for the week. Next, item number 7 shows the economic news calendar. Friday, we have not too much in the docket here. We have durable orders and goods and University Michigan sentiment, and of course earnings, guys, and a slew of earnings next week. Let's jump to the charts. First chart below, item number 8. This is the daily high performance KISS system on the S&P 500. Okay, again, this has been consolidating here mostly, and sorry about that, I needed to refresh the chart. It was an old image. So here's the daily S&P 500 KISS high performance system. So you can see so far we've pulled back here this week. We had a mark 9 late last week. We pulled back a little bit from it. But, we're still above the ATR. We're still above the current smart trailing stop at 56.57 and the 50-day moving average. So if you've been long the S&P based on the KISS system, which went long back there in early August, you're still long with your stop there. Moving average ribbon, you can see it's starting to pinch here a little bit, so we'll see if it can hold this support and we get another pop or not. Next, image number 9, here's the 4 time frames. Daily up here, again, we've pulled back a little bit. We're still above those support areas. Still holding the ATR on the half day. We're below the ATR on the smaller time frames, 130 minute, 78 minute. We do have a support cycle. We've been bouncing on the 138 or 130 minute. Next, chart number 10, moving back to the standard charts. Here's the daily chart showing the 5 key major indexes. Again, so far, pull back this week. You can see the Dow's been the weakest. Now it's below its middle Bollinger Band, which is the 20-day moving average. S&P 500 right around its middle Bollinger Bands. Same for the NASDAQ area. And you could see the Russell down here could be in some sort of ascending triangle type pattern. You can see the Bollinger Bands are starting to pinch, get a little tighter here. So we'll see how this resolves. Next, moving into the S&P 500 chart, chart 11. Here's the daily S&P 500. So here I drew a little bitty flag channel. You can see the demand zone. So we tagged the demand zone yesterday and bounced off of it. Otherwise, we're still in this range. So we'll see if this ends up flagging here, if we can get another pop to the upside. Obviously, earnings are going to be a catalyst. So we'll see, but still looks okay here. We're right around this area. Now let's see if we can get a catalyst for another push higher. Next, chart number 12. Here's another daily chart. Again, you can see that demand zone which we bounced off of today, more of a doji candlestick. Here's an uptrend channel which we're still in place. And again, so far bulls defended that area. Now we'll see if earnings could start pushing this higher or not. Next. Chart number 13, here's the half-day chart I showed on Monday. So we had that demand zone down there, which again, we tested and held, but we're still stuck in this range. Next, chart number 14, here's a 60-minute chart I showed on Wednesday. So you can see this wedge pattern. By the way, we broke that little inner wedge and pulled all the way back to the lower wedge trend line, going back to the early August lows. What I see here potentially, remember wedge patterns are 5 waves. I see 1, 2, 3, 4. So under the bullish view, this would be a wave 4. And then if that's correct, we should have another pop higher to a new high in a wave 5. Again, it needs to hold this wedge though. Next, chart number 15, here's a 60-minute chart. Again, you can see how we bounced off that demand zone today. Bounce, chop around. That said, this area right here on the horizontal line around 58.20 is resistance, so the bulls need to reclaim that. Next, chart number 16, here's a 30-minute chart. So on Monday, I was showing this coil pattern. Well, we broke the coil to the downside, had a quick flush. And so far we've bounced back, but so far the bounce back is only 3 waves here, and we have resistance right up here at 58.20, so that is resistance here that the bulls need to recover if we're going to go up again. And chart number 17, here's another 30-minute chart. This shows you one of our primary counts, wave 1, 2. This is a nested 1, 2, so wave 1, 2, 1, 2. Okay. If that's the true count, they should go to new all-time highs. We'll see if that plays out. That's what we favor for now. But again, we'll react to whatever the market gives us. Next, chart number 18. Here's the triple Qs daily. Again, slight update today. No changes otherwise. This system, as you know, has been long. Current stop is 479 if you're currently following this KISS system. Next, chart number 19. Here's the 4 time frames. Again, ATR support on these upper time frames. You can see on the half day, we also have some support cycles kind of covered up by the ATR there. We're below the ATR on the lower time frames for now, just like on the S&P. Next, chart number 20, here's the triple Qs daily. So again, we had a nice pullback yesterday. Today, a little up day, inside day. We still have this little resistance zone that bulls need to clear. Next. Chart number 21, here's a half-day chart. So here I drew what could be a little wedge to monitor, all right? But we'll see if we can get another pop higher in this or not. But really the bulls want to hold yesterday's lows now. Chart number 22, here's a half-day chart Steve showed last night. Gives a couple different wave counts here. One view would be an ABC of a wave 2. Now we'll see if this can go and make another high. And finally, chart number 23, here's a 60-minute chart. We broke that coil I was showing on Monday to the downside for a quick flush. We came back down to around the 61.8 fib, which is always an important area, and bounced off of it for now. Next, chart number 24, here's IWM small caps. Remember, they're still lagging here. It's kind of interesting. You got kind of a wedge pattern within, an ascending coil, ascending triangle type pattern. So we'll see how this develops. And chart number 25, here's a 30-minute chart. So on the IWM, as I showed the other day, you had 5 clear waves to the upside. And anytime you have 5 waves in one direction, look for some sort of reversal. And so clearly we got that pretty good. All right, guys, that does it for the major indexes. Let's go ahead and move on. And also let's do a quick check on futures. ES futures are essentially flat. Let's move on. Chart number 26, here's the VIX. VIX honestly just chopping around here. Remember, the VIX had that VIX Bollinger Band buy signal a few weeks back when it was above the upper Bollinger Bands and closed back inside. That was actually a great signal. Next. Chart number 27, here's the PMO indicator system. Now, just showing you this, it's not something I trade off of, but it's an old indicator system chart that I've had from stock charts. Some of you follow this. This is currently on a sell signal as it fell below that 66% a couple days ago. So that is definitely something to be aware of. Next, number 28, here's the S&P 500 versus the high-yield corporate bonds. The 10 tend to be highly correlated. As you can see, they move together. What you look for is divergences, near inflections like you had back there in October 2023. You had a lower high on the S&P, higher high on the high-yield corporate. That ended up being the bottom of the market there. You had a divergence there in July. That led to a pullback in the market. And you have a divergence right now, which is definitely a concern. This can be healed if the high-yield corporate rallies and takes out the recent highs, those. But for now, there is a divergence, and you want to be aware of it. Next, number 29, here's high-yield corporate itself. So you can see I drew a little channel here. There's a demand zone below, which we basically tagged the top of today. And you have that 50-day moving average in red. So now we'll see. The hope for the bulls would be if this can now rebound off the 50-day and take out the downtrend line of this channel, then likely this would go to another high, and that would be positive for the market. Next, number 30, here's the 10-year Treasury yield. Finally, a little pullback here. Again, you can see it's rallied all the way up into this supply zone. Little pullback here, but again, it's just one day. Chapter 31, here's TLT 20-year bonds. Remember I talked about 5 waves? Well, TLT, you can count 5 clear waves of the downside here. So whenever I see 5 clear waves, usually gives me a good trade opportunity. So I went long this, and I got a long with a stop right at the low there. Now we'll see if this can work higher. If this can work higher, remember bonds and rates are opposite to one another. This would cause a pullback in the rates, 10-year Treasury yield. That would likely help the market a bit. Next, chapter 32, here's TMF. So if you want a leveraged way to play a bounce in TLT, this is the ETF for you, TMF. It's the triple ETF, triple leverage TLT. So same deal. You could be long this with a stop right around that 46.95 low. Next, let's review some of the market sectors, just a few of them. Here's XOK Technology. Here I added a little flag channel to monitor. Again, what the bulls need to do is break above this downtrend channel line. Remember, the XOK never did take out its July highs, unlike the S&P. Next, chapter 34, here's semiconductors. Same deal. This area's been lagging a bit. In fact, they never filled their open gap above. So if the market makes another high, that would be one of my targets, is filling that gap. Next, chapter 35, here's the bank sector. This ascending triangle I drew a few weeks back played out awesomely. Still looks pretty good. It pulled back, found support right at the 9 EMA, trying to bounce off of it again. Still looks really good, this sector, and financials. Next, chapter 36, biotech. This kind of has an ascending triangle look, though I'd like to see it hold this little lower trend line. But if this can start rallying and break this little downtrend line I have in here, I think this could be a good swing trade. Next, chapter 37, XOY, consumer discretionary. Remember, this has Amazon in it. Anyway, you have a 3-wave pullback here. In an uptrend, 3-wave ABC pullbacks are bullish. So, to me, this looks like it could try to make a new high. Chapter 38, here's real estate, IYR. Remember, it pulled back, found support at the demand zone that we drew ahead of time a couple weeks ago. So far, bounce back, still holding the 20-day moving or 50-day moving average in red. Now we need to see it break its downtrend line if it's going to take out the highs. Next, chapter 39, XLE Energy. So this is still just chopping around. It's holding up very well, though, considering the weakness in crude oil. Still above its 50-day and 200-day moving averages for now. It's been honestly consolidating really since April. And finally, chart number 40, here's FXI. That's the Chinese ETF. Remember, you have a possible ABC pullback there, but this is still not doing too much. And the reaction in China is fluid. My wife is Chinese. For those of you who might not know, I'm a white guy, but, my wife obviously has a lot of family in China and, looks at a lot of the local news there. But China's economy is not doing well, guys. It is not doing well. And that's kind of my concern longer term if they implode, because they have some real problems. I'm not going to go into it now, but anyway, clearly they're going to try to do as much stimulus as they can because they are struggling. But a lot of it's self-inflicted, honestly. But again, talk about that another day. Let's go and move on. Chart number 41, here's DBC Agriculture ETF. This is the weekly chart. It's up 1.4% for the week. I'm just showing this because you can see it's been trading in a range here for 2 years now. Next, chart number 42, here's DBC SPY ratio. So the S&P 500 has generally outperformed commodities for quite a while here, but notice you got a wedge forming here. This is something to watch, monitor over time, because if this starts to break out of the wedge, then we could see commodities would be your next leader, and we'd likely be in a bear market in the regular stock market. Next, chart number 43, crude oil, otherwise still downtrending here. The last bounce from September into October was a simple ABC three-wave. So we're still downtrending here in a little downtrend channel. And chart number 44, here's the weekly. Just shows you the bigger picture view, the weekly. Next, chart number 45, UNG Natural Gas ETF. Nice rally. Again, this had come all the way down to this big support area. It was a good area to take a shot at. You had a nice little tight doji near major support. It's a good buy. It's had a nice rally. Remember, the last rally stalled at the 200-day moving average. Well, it stalled there the last 6-7 times. So anyway, but this was a nice rally off support. Chart number 46, here's the 60-minute view. You had a tight wedge. You had some MACD divergence I pointed out last time, and it's had a nice rally up there. Now notice there's an open gap, unfilled gap above. So up there around 1480, that could be the next target. Still looks really good. Chart number 47, here's copper. Slight bounce today. It's back in this demand zone, 50-day moving average. You got an uptrend line below that. You also have the moving average ribbon now is pinching, squeezing. So we'll see if we could find support now there. Next, chart number 48, DBA Agriculture continues to be weak. The positive here is you got a three-wave pullback. I like three-wave pullbacks unless this turns into something more impulsive. But right now you have three-wave pullbacks back in the demand zone. So going to watch it to see if it finds some support in here or the 200-day moving average. Next, chart number 49, here's Bitcoin. So Bitcoin up today. We do have a potential higher low at that 65,000 area. If you're long, I think you could have a stop right there. You know, here, now I want to see a follow through here, but otherwise I like the chart. I like the weekly chart especially, which I'm not showing here tonight. Next, looking at some of the crypto stocks, we've had some awesome winners. Here's Cipher. I had this as a long idea a few weeks back. There was a nice ascending triangle pattern here. There was basically two patterns. You had actually a tight coil, and you had an inverse head and shoulder pattern. It was an excellent pattern, and it just continues to work its way higher. Congrats if you bought that one. Some others, here's Wolf. This is another one. Nice, had resistance at 543. You can see it's tested its recent highs. Perhaps, now today's volume isn't pretty, but perhaps this could form some sort of cup and handle. This could be the cup. Maybe it handles out here. Something to watch for. Chart number 52, here's HUT, another one that's done well through that 1350 resistance. And finally, chart number 53, here's another one, Irene. You got a resistance right at 970, essentially. Okay, let's move on. Chart number 54, US dollar, finally pulling back today. A little bearish engulfing candle. Again, it's had a hell of a rally off that base. Remember, you had 5 waves down, MACD divergence. Everything was set up in the dollar, and the dollar has screamed higher. We are up in some resistance area, a little supply zone. We had a little RSI divergence here, so let's see if this pullback, if it's one day or if this now finally continues. Next, chart number 55, UDN. That's the inverse US dollar ETF. I actually bought a little bit of this one yesterday and this morning. Here you got this MACD divergence that's been building. It rallied off the bottom of the channel. It's now testing the top of the channel. We'll see if this can pop or not. Again, it's a way to play a pullback in the dollar. Next, moving to precious metals. Chart number 56, here's gold. Again, gold, nice pullback yesterday, bounce back today. Still holding its 9 EMA. The only thing that concerns me here is you got this MACD divergence. Again, this could be negated on another power move. What I don't know on gold, guys, is remember I've been targeting $3,000 as one of my major targets. That's a big round number. We're not very far away from it, right? So does gold finally pull back in here, have a correction, or does it just shoot up to 3,000 first since it's getting close like a magnet and then pull back? That's the big question. But remember, gold is in a bull market. I called it last year. I called it in March. It's up way more than the S&P 500. It's up around 30% this year, I think. So, congrats if you listen to my bigger picture call on gold and silver back in March earlier this year. It's had a hell of a year. And that's the thing, guys. Breakpoint trades isn't about day trades. And in fact, a lot of times, at least a handful of times a year, I'll go out on a limb and make some major macro calls, on some sectors that I think can be held for months or years at a time. And gold and silver were one of them. Next, chart number 57, here's GLL. That's the ultra short gold ETF. So if this area does finally have a pullback, this is one to watch as well. You have a positive divergence there for now. But again, still downtrending, obviously, but it is something to watch if you're looking for, if you think gold may pull back, or maybe if you need a hedge for gold. You got a bunch of gold, you don't want to sell it, but you want to hedge it. This could be a hedge. Next, chart number 58, here's gold on the weekly. Remember, been on this parabolic uptrend since 2022. The wave count seems like we're working on wave 5 of 3 here. Again, I've been talking about that for weeks and weeks now. Just still working higher. This is more parabolic, so that's why it wouldn't surprise me if this also just powered up to 3,000 first. What concerns me long term, guys, is all the frickin' spending. Spendaholics politicians give money away. And you know what's happening with these BRIC nations that are using gold to back them, and getting away from the dollar. It's not so much that gold has went up so much in price, it's that the US dollar has lost so much of its buying up power. Okay. Next, chart number 59, here's silver. A little pullback today, but again, get higher highs, higher lows in place so that you can use as major swing stops. And chart number 60, here's the monthly view. Like I said, nice rally out of this big 4-year coil earlier this year. I am targeting much, much higher prices over time, well into the upper 40s, even in the 50s. Again, it's going to take time, but I think this should go much higher over time. And finally, chart number 61, here's Palladium. So over a month and a half ago, I talked about this bottoming pattern on Palladium. Get a nice base here. And I said, this looks good. My targets were the first supply and second supply zone. Well, look at this. It's really moved nicely the last several weeks. Look at the volume bars here. Look at your moving average ribbon. It was tightly wound, and it's now curling to the upside, unfolding to the upside. I mean, this could be starting a major trend move, guys, off a major bottom. This looks really good. It's already up 6.9% this week alone. And if it just gets to that supply zone above, I mean, that's roughly a 40% move from here. Next, chart number 62, here's Palladium daily chart. Remember, this is tradable ETF. Yet a nice coil, which I've been pointing out. Huge pop today. Congrats if you've been in it. It was up 9% alone today. Next, chart number 63, here's GDX. Nice sell-off today. Again, it's been just chopping higher highs, higher lows. Chart number 64, here's GDX on the monthly. Like I said, we have a beautiful coil breakout well over, about 4 months ago. One target would be the supply zone above, which we never tagged. Next, chart number 65, Newmont. So Newmont was the disaster today. Newmont down almost 15%. Look at this ugly candle. Earnings. This is a reaction to earnings. Guys, we're in earnings season. Again, my warning to you is a lot of times, I think more often than not, I see these precious metal stocks reacting negatively to earnings. These are ones I generally suggest not holding into earnings. And look at that. The Newmont chart looked great. It looked fine. Yeah, there was a little bit of divergence here, but it was strong. But look what earnings did to it. So be careful if you own some of these individual stocks. This is the largest component of GDX. This is one reason it was down so much today. If Newmont hadn't get hit like this, GDX would likely be flat mostly. Next, driver 66, SA, one of the long ideas we've had. Really nice trade out of that coil. It's obviously pulled back the last couple days. And Charber 67, BTG, another nice trade idea in the precious metals that has done well. Right now, this one still looks pretty good. It's flagging off the 9 EMA. All right, moving on to trade ideas. So Charber 68, IBRX. This was on my list for a couple weeks. This little bottoming pattern. I said to watch it. Yesterday, it tried to trigger, pulled back. Today, big pop. Again, great trade. It's up 21.5% today. Great trade percentage-wise. Congrats if you caught that. In fact, again, this isn't made just for a day trade. I think this could follow through. Next, number 69, NVIDIA. This has been a nice trade out of that coil. Still holding the 9 EMA. Still looks okay. Charber 70, Rocket Lab was up again today. Tried to launch, pulled back to earth. Big doji spinning top candle there, but it's been a heck of a trade out of that nice coil that I put out 2 weeks ago. Charber 71, SNCY, another beauty. Had a great trade. Hope you took some profits as it's starting to pull back here some. Charber 72, NPWR, another beauty. This is I put out a couple weeks ago. I put it out on this nice candle there that went through $7. What attracted me to it, guys? What attracted me was the base and the volume. Well, it then took off the next day, and it's had a hell of a move. Now, so far, the last 2 days, you had a couple big doji candlesticks. Hopefully, you took some opportunity to take some off on those moves. Excellent trades, though. Charber 73, CBOE, when I talked about it on Monday, said it looked good. Still looks good to me. Yeah, it pulled back a little bit yesterday, but it's trying again. Charber 74, AMPX, a little low-priced one. It's done well, but it's pulling back here the last couple days. Hope you took some profits, though, before today. Charber 75, HIMS. Steve set this up. Gave you a nice little quick trade. Pull back. Still looks okay, but it's got that resistance area above. Charber 76, LWLG, one that was a great trade out of that $3 range. Again, hope you took profits because it's pulled back pretty strong in the last couple of days. That said, it may be worth looking for a new entry down here. Look at the volume. Volume was very nice on the upside. It's been very light on the pullback, which is typically bullish. Charber 77, YMAB, coil pattern, tried today, pulled back. We're still keeping it on the list, though. Charber 78, PayPal. It's been on the list since Monday. It's been trying here, but stalling, struggling. Still looks okay, so we'll keep it here for now, but I'd keep stops fairly tight on it. Here's some new setups. Charber 79, YPF. Nice flag pattern, good volume patterns. Looks pretty good. Charber 80, SOC. Nice little tight coil here, one to watch. And Charber 81, SDRL. This one had a big gap today, a little breakaway gap on big volume. Here, this could be a momentum play. So over today's highs, over 38.87. Maybe get a quick pop at least to the 50-day. And the final chart, Charber 82, COO, Cooper. Nice volume today. Testing the downtrend line. You got a support here. So one to watch here. And that'll do it. All right, guys, we'll see what happens tomorrow. Quick check on futures again. ES futures are down 1 point, so no big moves there. Bitcoin's holding up fine, and gold is down 1.5 points. So we'll see what happens tomorrow. Again, appreciate all the support. Take care.